The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good. Let's take a look at the German DAX and the FTSE today. Still in a positive up mode. The actual DAX actually went up and made a slightly higher high before backing off a little bit. The FTSE was quite a bit under that. Whether it's related to anything about the viruses over in the UK remains to be seen, but that's way over my pay grade. Boys and girls, it's with a great deal of pleasure that Billy Ray Valentine, through some of his associates in the City of the Wind, have going to share with you one of the most incredible patterns you will ever see in all of pattern recognition, technical analysis, and moving averages. And here it is. This is known as the Loch Ness Monster. It comes out of Las Vegas, Nevada. And as you can see, it has all the characteristics of the Loch Ness Monster. It sticks its head out of the water and then puts it down below the water, never to be seen again. I don't know where the guys get all these things, but boy, they sure are funny. I sent it in to the MTA, but they still will be able to see whether it's going to be a valid pattern or not. This is the first instance that we've seen this. Now, Mr. Z has asked a question about Larry Williams' cycle work that we focused here on. Larry doesn't mind us sharing these. I've already checked on with this. This is the cycle that he was looking at on March the 23rd. If you remember, that's when he became very bullish. And now you'll see on the 28th of July, 8 days from today, he's suggesting a pattern that would be topping in here. And the interesting part here is that it would go down into 9/11. But you'll notice here that the down move that should have occurred between May and mid-June really didn't occur. It's still going higher. So, you have to use a little common sense with these folks. So that's Larry's work. He does a great job. I think that, to me, I've known him 50 years, and I've never seen a better call than what he made on March the 23rd. Because if you remember, he said he was all in. He said, this is it. It's going to stop right here, and it takes a lot of courage to do that. We had a beautiful 3 drive to a bottom point at that spot, and the whole world was certainly negative, and you can see what happened with these. I mean, I think Boeing was trading at 62 or something like that, and it's a lot higher than that. So let's keep in mind. We have Norm Winsky as our guest at the break today. Always good information. I wanted to share one of the stocks that, information about the tax stuff that's coming in here, just to show you where we are supposedly this year for taxes. Whether this means anything or not, folks, I don't know. It just shows you that the dire interest that you're looking at here is really is quite absurd. You'll see we're down 92% in taking tax receipts. So that's going to be interesting to see how we get some of these things funded. But we're just printing money. And as long as that money is being printed, it's going to be a difficult time for the markets to probably move lower. Now, I want to do, I've got a couple here that I think look really interesting today. This is one that comes from the Elliott Wave, folks, because it shows the Ridex funds. It shows that the people in the Ridex fund, they're extremely optimistic, more than they've ever been. Now, I don't know if this chart is correct or not, but I have to respect the work of Ralph Elliott's people, Bob Prechter, because they usually do. They watch it very closely. So that's telling us this market is extremely overbought. Now, whether the market moves down or not, I don't know. I mean, it starts higher last night and then dropped all the way down to, 31.93, and then's rallied all the way back to 32.15. So these are just a few of the ones that we're watching. We had a beautiful Gartley on the close in the Dow Jones on Friday and also in the Russell. Both of those have worked pretty good. But again, the Dow Jones has rallied back to being unchanged. So that's a sign there's more buying coming in here. Now, what's really interesting, and I think this is something that you folks probably already know, but I'm going to share it with you anyway. And that is, here's the relationship, folks, between the market that is trading at normal Globex hours and the one that's trading after hours, the overnight session. Look how positive the overnight session is compared to the day session. That's starting since May. I mean, that's just really amazing how that's able to do that. So, and I think it's probably able to do it because there's less liquidity there. And if someone like the Fed is in there wanting to hold the market up or keep it down, they can certainly do it easily during that time. Sorry for the raspy voice, folks, but the Palo Verdes we're in the middle of the monsoons here, and the Palo Verdes are really blooming, and boy, it doesn't take long for the old cowboy to get affected by it, but I'm in good shape. It's just that my voice is a little raspy. Of course, when you reach the 8th furlong pole, it's supposed to be raspy, so let's keep an eye on something like that. Let's talk a tiny bit here about Tesla, folks. This is the stock of the year, I think, without too much trouble. The stock dropped by a third. It went from $9.90 all the way down to $3.70, and from $3.70 it went to $17.95. That's a move of $1,444 from March through July. And believe me, folks, Tesla is not an automobile company. Tesla is an artificial intelligence company they sells data. The most valuable thing in the world today is not gold, it's not oil, it's not diamonds, but it's data. I didn't realize this, but if you own a Tesla and I drive my car past your car, that information from my car goes into the Tesla. And I couldn't believe it. Someone showed it to me, and I said, "Oh, that's impossible." But they have more information in that stuff than you can ever possibly imagine, and that's pretty much what you're watching. Not only that, but 78% of the stock in Tesla is closely held by insiders and large hedge funds and stuff like that. So the public float on that isn't very much. So that was one of the things that makes it. But it trades really nicely. I mean, it trades beautifully off the patterns. Now, look, let's pay attention here. If a stock can go from $9.90 to $360, drop by 2/3 of its price, it can certainly have a correction from $17.95. Now, the key price to watch for Tesla, if you trade Tesla, is to watch the price of $15.70. If we go screaming above $1,600, that's telling you that $15.70 is no good, and that means that stock still has power to go higher. I mean, we dropped $300. Didn't we? Let me see, 17. Yeah, we dropped over $300, $350 in the stock, and we've only bounced back, about $150. So that's the first sign of weakness. But if we get above $1,600 a share, that's going to change the map of what it could be doing. So let's keep watching it. We'll see that. Okay, all right. Yeah, I see the question there for Duffy says about Leona Hemsley. Only the little people pay taxes. Well, she went to the big house to pay the rest of her taxes. So you don't want to go to the big house, folks. That's not as much fun as people tell you in the movies. Let's move over here to one other one that I wanted to cover, and we'll cover that right after the break here. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the gold. This is a 15-minute chart. You'll notice the low that we have there on the chart was a 78% retracement. It was also down $34 from the high, and which is very close to the harmonic number in gold at $32 per ounce. And now we've taken out the highs here from this chart at $18.21. Folks, it looks like it wants to go a lot higher. When the market can only make a 382 retracement like this on Sunday night, and it missed it by 30 cents. So, if you were trying to buy it there, you had to shade it by half a dollar in order to get in, and now it looks like it's going to go higher. Now, if we turn around and we break below the 1806, then that will change this whole program. But until that, or this particular pattern, if that doesn't happen, we're looking to take out those highs at 1829. I would think sometime today or tomorrow. Silver continues to, move higher. I believe we're almost above $20 an ounce now. It was very close to it last night. I haven't checked it yet this morning, but it certainly looked like it wanted to go a lot higher. So that's something that I think is worthy of your attention. There's one other one that's looking very interesting, and I know it shouldn't surprise anybody, and that's the soybean market. Let's get this up here. This is the daily. Can you tell me the last price of the September silver, please? If someone would be so kind just to let me, I think it's trading above 20. There it is. Oh, it's way above it. Yeah, thank you very much, Morgan. Appreciate it. Okay, here's the price. Right now we're trading at $8.98. That's just a penny higher than the 61% retracement. But the interesting thing was last night, Rich Anderson sent me an early report around 5 o'clock in the afternoon on Sunday that the farmers were taking, what am I trying to think? The grain elevators were taking, I couldn't remember grain elevators. The grain elevators were taking protection of 10 cents in soybeans because the weather had improved a little bit. And the market said, no, we don't like that. And it didn't open lower at all. So that's the first sign that there might be something going on over here in this soybean market. You see, we have these higher bottoms in here, and we still have a price objective up here, at least another 50 cents higher at 9.24. So the bean's starting to look good. And of course, we're in the middle now of the well, fact is, we're coming into August 1st here, which is that's the pollination time of the beans from August 1st to the August 15th. So if the weather is really bad during that time, that's when it goes off. Whether it has anything to do with the China thing or all that stuff, folks, I think all that stuff that they feed us is total malarkey. I just don't see it. It just doesn't make any sense to me. We live in interesting times, is the old Chinese curse, and that Chinese curse goes way back about 4,000 or 5,000 years, so it's nothing new. All right, let's take another look at something else that looks pretty interesting here. This comes from one of our listeners out in Arizona. I guess it's in northern Arizona, because it certainly is not down here. Let's take a look here. This is a chart of the trucking index. I'd never even seen this. I didn't even know that it existed. Old Dominion happens to be the big daddy rabbit. I think it's about 50% of this index. But if you look at the left over here, we had where the three arrows are, the three blue arrows on the left, a beautiful three drive to a top pattern. Then we made one slightly higher high, basically like a double top. Then we had the big correction into March 23rd. And look what we've done here. We have absolutely exploded to the upside. You can see there's a three drive pattern up in here. But I know nothing about this index at all. It was just sent to me, and I saw it. I said, I can understand why the airlines are so low, but I would think that the trucking would be a lot better, which I didn't think it'd be that much better. But that's basically just a few stocks. And if you look at Old Dominion, Old Dominion is basically like Apple is to the tech stocks, because it has so much money and it pays so much money back in dividends and buybacks. So it's basically a no-brainer for the hedge funds, and that's why it's so very, very strong. So those are a few things that you got to think of when you're doing these things with these stocks, because there's so much that you have to keep in mind. Now, I wrote a book here about 6 or 7 months ago. About 3 months ago. Yeah, pretty close to 6 already. Oh, yeah, you're right. Okay, let's take a look at this here. This is comes from one of our students over in Denmark. Basically, these lines that you see here, these black and red lines, these are the standard deviations from the mean. And if you'll notice here, you'll see that these things come very, very close to hitting the exact numbers. Now, what's interesting, if you look at the little blue arrows that are there, those are the arrows where you're seeing the retracement numbers or expansion numbers. And it really helps, because if you're looking at the standard deviation and you're trading options, that's how they that's how they value the options. It's based on the standard deviations from the mean, one standard deviation or two standard deviations. If you go beyond two standard deviations, you're looking at something that's pretty tough to get over. So we need to remind yourself when you're doing that, you're against these option players, and they're using leverage, much more than you are, because the options market, I believe, is about 6 times bigger than the futures market, especially for the S&P and most everything else. So the reason why I'm bringing this to your attention today is because the number that you're looking at for your first standard deviation in the NASDAQ today comes in at this 10,680, and where are we at right now? We're at 10,666. That number in the S&P comes in at 3218. So just keep an eye on those numbers to see how well they respond around these time frames that you're looking at for trading. Because if you see the market come into resistance at those times, lots of the times it's going to be related to the what's going on with the options market and how they price these options. So that's what I'm watching there. I hope that helps a little bit. The other one that's very interesting today, folks, is the euro. Let me get this up here, because we did what we thought it was going to do last night. Let's get it up here so we'll be able to see it, because we made this big double top up here. I'll get it right here, and we'll see. Get this up here. That's at 40. The double top came in at 114. 1.78, I believe, and the 1.27 is 1.148. We were short that with a stop just above the high. So far, they missed it. It moved back into the profit zone right now, but this should be a pretty good top here that we're seeing in here. And the reason why it's so important, folks, is because what's happening to the dollar index, because the dollar index is on life support. Let me get this up here and take a look at it. You'll notice here on the dollar index, we must hold this 95.20 level. That's a very, very good. We break below that, folks. You should see the weekly chart on this. I don't have time to push it up right now because of Norm being on, but you don't want to be long that dollar index below 95 even, because that is really negative. We're going to talk to Norm Winsky at the break here, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ADCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Norm Winsky of Astro Trends on the line. Norm, how are you doing today?
Good, Larry. Thanks for having me on your show.
You're welcome. You've got the mic, my friend. Continue, please.
Okay, I believe I was last on your show on the Monday the 13th, and I guess it showed you what was happening back then and said that we should look at the various markets, and that's what we're going to review right now, and then we'll see how that might relate to what's going on right now. So on Friday, the previous Friday, we had Venus at aphelion. Venus, a 225-day cycle around the sun. Aphelion is from your Greek. And so that if it has an A in the front of it, that means it's afar. There's your mnemonic, your memory helper. And so Venus was at its farthest point as it goes around the sun. And we want to look at your Venus markets, which are cattle, copper, and because it has to do with the sun, the corn is related to the sun. And it's golden corn, and the sun is golden. Cotton, there's gold, OJ, stocks, sugar, and wheat. We may just skip over OJ because nobody cares. All right, and then over the weekend of the 10th, we had Mercury turning direct, which that happens about 3 times a year, and Mercury relates to the grains, and because let's see, we had so there you have corn. It was in the sign of Cancer, so that's silver, and there's your soybeans, stocks, and wheat. Stocks responded just about everything. Then that afternoon of the 13th, we had Jupiter making a 120-degree angle to U.S. Neptune. That's where Neptune was on July the 4th of 1776 when our country was founded. And that's stocks, T-bonds, U.S. dollar. And because it had to do with Neptune, we might want to look at oil too. All right, here's our first chart. There's cattle. A yellow bar means we're doing nothing because it's going sideways. We kind of operate on Newton's law. For every action, there's an opposite equal reaction. When we get to our magic moment there, if it's going sideways, Newton says that it's probably just going to continue sideways, and so we don't do anything. Okay, if it had been a day later, we had a little rally there into the next day, that would have been a sell, and then we could have made some money, but that's not what happened. We took a pass, so that's a nothing. Here's copper. That had a nice trend to it, so we'd be looking for a trend reversal there. We were 1 day early, but sometimes that's okay. But in this case, it wasn't because it went too far against us. And you probably would have, if you used any kind of reasonable stop loss, you would have probably got stopped out for a loss. And there we go. This went 68 cents against you, which is $1,500 to $2,000. Not acceptable. All right, here's corn. Corn was hovering around its high there. That's an obvious high there, just off the high the day before. And that made a nice top there. Then it came down. Our window for a possible low here, our change in trend window, was for the Mercury going direct into the Monday opening, and that was about 2 days early. So that was a miss. So we went 50-50 on the corn. Here's cotton. It did very nicely. We had a top there with the Venus point on the Friday the 10th, just off of the high of the previous day. I allow 1 trading day for these, and you need to have a reasonable risk there, and I think that would qualify. Here's your gold. Had a little pullback low into the our point there for the that's the Venus point there on Friday, and so you had a little pop up there. You could have made a small amount of money in the gold. The old, if you remember that Monday afternoon, the oil made a top and pulled back a couple of dollars, so there was it only lasted about a day, but there was a couple $1,000s, I think, to grab on the table there. Silver did not respond very well. I guess it was kind of like the copper. We were just a little bit early, and so it popped up, and it's not a reasonable drawdown, so had to call that a miss. All right, here's your beans. Did nicely. We were looking for the low. I think you said so too, Larry, for that Monday, the 13th, and so we were on the same page there, looking for a low on the beans, and that's what happened. And they went up all last week. We have a green box here because this is one of the few markets that we're coming into another change in trend window, and we actually have a trend into a clear trend. A lot of these markets just kind of been going sideways the last few days, so it's not clear. This is the one where you might have a good possibility for a change in trend here in the next 1 to 2 days. Here's your S&P. We're going sideways into the 10th, but then over the weekend we popped up into the Monday opening there, and I said I thought we were looking for probably a top there by Monday afternoon, and we certainly got that. If you remember, we had a swift, I think it was about 85 a handle drop or more. Maybe I think the total was even more than that into Tuesday's opening, and so that was pretty nice. had 2 points there for that Monday 13th. Here's I threw this in. This is not official, off the record. I don't follow the NASDAQ closely. I only follow it casually as an indication of extreme psychology and so forth of the stock market. But you can see what happened there. That Mercury Direct basically topped the NASDAQ out for the whole week. The S&P went up and made new highs later that week, but not the NAS. Not the NAS. Here's sugar. That was a miss. It just kept going down. We look to buy on weakness, sell on strength. That works about 75%, usually about 75% of the time. Bonds had a little pullback there into the 13th. That was our window for that. And then they popped up and you had a chance to make some money. Here's your dollar. The dollar just kept going down, 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 but we've had a pretty clear trend down into what's going to be our window here. I'll be talking about that shortly. And we worked out nicely. We made a top there on the Friday window. Then we came down into the Monday window, and so you caught the high there and you caught a low there. And so it was 2 out of 2. All right, here's what's coming up. And here's our score here. If you count up the green arrows and red arrows, we had 10 winners, 5 misses out of 15. That's 66.67% or 2/3. Here's what's coming up. We have today's the 20th, and this afternoon, I think about 1:30 or so, we have a new moon in the sign of Cancer, so we'll be watching for your financials, grains, precious metals, and silver, because it's happening in the sign of silver, in the sign of Cancer, and also because anything to do with the moon is a possible silver thing. It's a silvery moon. All right, on the morning of the 22nd, that'll be Wednesday morning, we have a Mercury event, and Mercury will be what's called maximum elongation west. Has to do with the relationship between the Earth, the Sun, and Mercury. Whether Mercury is ahead from the point of view of the Earth, and Mercury is ahead, how extremely at the extreme point ahead of the Sun or behind the Sun. And we'll be looking for the grains, of course, for Mercury, corn, soybeans, and then stocks always, and wheat. And then we're going to have something later in the week. We have after the close of the 23rd, I believe that's Thursday night into Friday morning. Watch for that oil. Oil might get a point there for the oil. If we get to some sort of extreme, we like to see the markets get to an extreme. All right. Now, also we have the financials coming up here now with that's a new moon, right? This afternoon. So we look for something that's been trending nicely. There's your euro going up, up, up into our window right now as of last night. These are when I did these charts last night. And so watch for a possible top for the euro. And we're going for a commercial.
We are. We'll be right back with Norm Winsky of Astro Trends.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, with Norm Winsky on this lovely new moon day. Go ahead, Norman, please.
Yes, sir. So we were looking at the euro. The euro's been going up, up, up. That's what we like. We like when markets trend strongly into one of our change in trend windows. Usually they turn with 70-75% of the time when that happens. And the currencies like to dance to the moon most of the time. Not always, but most of the time. And so I'd be looking for a change in trend here in the euro based on what happened up to now as of last night. The Swiss franc, which probably not too many people look at, that also popped up here, and that's another possible candidate. Just going back now, since I think we have a little bit of time. S&P, let's go look at the S&P chart here. As Larry mentioned, we dipped overnight last night. Now we're right back to even, and it's kind of sideways, so I'm not too excited about this right now. Maybe we wait till the second. My second point there was the Mercury point, Wednesday morning, and so right now it's not real exciting unless something, obviously things can change rather quickly. But, I'm looking. There's the S&P there going sideways. So not too exciting there in the S&P right now. And so there you go. So, but I think beans looked interesting. Let's see, we looked at the bean chart. Yeah, beans have been going up, up, up the past week. So that's a candidate for a possible turn here. So if I were long beans, I'd be looking to get out and maybe even go and short those beans. So there you go. So there we go. So if it's going, it got a nice trend. There you go. The dollar. This kind of a mirror image of the euro. It's been going down, down, down. We're down to around that magic 96 support level, and it looks like it might get a bounce here off of 96. So there you go. So that's kind of sums up what I see here right now, and then I'll tell the folks how they can get a hold of me and get some goodies, So there's my contact information. I offer a free day trading class every month, and I have a swing trading class. And I go into advanced, if you want, I can go into advanced Fibonacci. I can teach you fractals. You can learn a little bit of GAN. And I try to reduce the stuff to simple. And if it was anything over a grade school level, I couldn't do it. So I know my stuff looks complicated, but once I explain it, everybody says it's very simple. So there you go. So there you go. You can get a hold of me here in beautiful Naples, Florida. Let me give you a picture there. There you go. There's where we're at. There's on the beach at the Gulf of Mexico and Naples, Florida. And there's my email, anwinskit@barkmail.com. That's a Q in the middle there. And there's my phone. You can call me and talk to me. You don't have to talk to a website or a robot. You get to actually talk to me. I got about 50 years experience, including 12 years as a Chicago floor trader. There ain't many. It's a dying breed, 239-594-3939. You can just call me on Skype at NWINSKI_1. So I can take questions from the Dan or whatever you like, Larry.
We have a question. Is there anything in this new moon scenario that is different than just a normal new moon? Does it have apogee or perigee or?
No, none of those. But the only thing unusual about this is that we managed to get two new moons in the same sign. It's kind of like the astrological equivalent of a blue moon. You know what a blue moon is? That's when you have two new moons in the same month. This is we got the same. We have a new moon in the same sign, in the same cycle there within the same sign. That's rather unusual. We just the new moon a month ago just made it into the beginning of Cancer. Now we're at the end of Cancer. That's a 30-degree arc, and so it's only because it's a 29.5-day cycle that we barely made it into the at the two ends of the same sign. So that's rather unusual. Don't know what it means, but it's kind of a novelty, shall we say? There you go. All right. Any questions from the Tiger Den there? Or
that was one of the questions.
Want to apple pie recipe or anything like that? Or?
Well, they're pretty much covered for that. The next question that we have is the fact that these cycles are every 14 days, new moons and full moons. How much I don't know if you can even answer this or not, how much do they vary between, the full moon and the new moon as far as number of days going into the moon? I think that's what he's saying, and the number of days coming out. Do you know the statistics behind that?
The lunar cycle is 29.5 days, so divide by 2, I think,
Oh, yeah, I understand 14.5, but there's got to be it doesn't come exactly like on the 20th. It usually can be on the 19th or it can be on the 21st or something like that. What's the variance on these lunar cycles?
I don't know the answer to that then. I thought I just look at the average is 29.5 days, and I just look at when they tell me the moon, new moon or full moon is, and that's it. I just do what I'm told,
Okay. Oh, that's unusual. Listen, Norm, thanks for joining us, and you have a safe time down there. Are you social distancing like you're supposed to be doing?
Oh yeah.
That's good. Okay.
I don't know if you can see this picture or not. Here's the live camera at the pier here. You can see there's not many people there now, right?
Yeah.
If you can see that picture or not, but I put that on my screen share. Live camera there down at the Naples Pier. Hardly anybody there.
All right, we'll have you on again one of these days soon, so take care and be safe.
All right, thanks a lot, Larry. Everybody have a great day.
Norm Winsky of Astro Trends. Okay, let's take a look at these markets, what we're doing now. Let's see, when we left, we were trading at 32.15. We're now 32.11 in the S&P. We got almost to that number we were looking at in the NASDAQ. We were trying to get it at 10,700. We got to 10,684. We're 20 handles away, so we'll probably get close to that one. So we'll keep that one on the scope for sure. We'll watch it very closely. We did have a little $7 break here since the show started between 8:30 and 9:30. We went from 18.21 down to 18.13 in the gold, an $8 move, and now we're starting to go back up a little bit. So there's a little resistance up there at that 18.20 level, but frankly, these markets in the precious metals look like they do want to go higher. The only retracement that we had in the S&P overnight, of course, was right at the 382 retracement at 1806 after we came off of that 78% bottom back on last Thursday at 1794.1. All right, now the soybeans, let's just double check. Norm says they might go down today, and that's certainly a possibility. They do that a lot. Let's just get this up here so we can take a look at these soybeans this morning and see where we are. 1892. Well, they're trading at 98. The low today has been 1894. They're actually holding up pretty good. Let's put this chart up. I would rather be you could sell them here because you're right at the 61% retracement if that met your fancy. But frankly, the way this market is acting with the news that they should have been a lot lower and they're not, I would be a little bit careful on that. But your risk here is very small. They've been as high as $9. We're at $8.98 right now. And if they get above 902, I would think, yeah, they're probably going to keep going higher. But I'd be watching for a retracement, folks. You'll notice back on between the 14th and the 16th, we had that 135 pattern that came in. Boy, when you see those, you have to pay attention because it forces you to trade with the trend. We'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have a caller on the line. Dave, are you there?
Yeah, hi. Hi, Larry. Can you hear me?
Yes, sir, perfectly. What can I help you with?
So, I catch your show throughout the years and sporadically, but I picked up many times where you have said, don't start trading or scalp trading until 10:15 to 10:30. And I think you're totally right. But I was just wondering, how did you come about to that analysis?
Years of experience. Basically, that's known as amateur hour, Dave. Usually the people put their orders in, right at the opening. It's not as prevalent as it used to be because of the overnight trading, but it still works between 9:30 and 10:30 on just about everything. New York time, if you'll watch those times, it's probably got a better than 60% chance of making a higher low during that time. And when it's a really significant low, like a double top or, a head and shoulders or a Gartley butterfly, something like that, then you have a little bit extra to go on. But it's really good. I've done a lot of work with timing, and some of that's covered in that Floor Trader's Handbook that I did a few months ago that shows that these statistics are really, really quite valued, especially that opening price. That opening price extends from usually 9:30 when the stock market opens to the first hour into 10:30. And when you're past 11 o'clock and you're still making new highs or new lows, then be very, very careful. That's the ideas behind a really strong trending day, and you don't want to stand in front of that. That's pretty dangerous. We alert people as quickly as we can to see that could be that type of a day. So that's the answer. I hope it helps.
Yeah. Do you see any kind of a trend already in the first half hour here?
No, we haven't got above the 18 level, 32.18 in the S&P. We're trading at 32.10. The NASDAQ is interesting, see, because it's getting right near that magic number that I talked about at 10,700. We're almost there, 10,694, and here we are at 9 o'clock. So after, we're almost at 10 o'clock. So at 10:30, if we're below that, it's a sale. I hope that helps. Thanks for calling in, Dave.
Thank you.